Howden Africa designs, manufactures and markets specialized air and gas solutions.
Yeah, so underground fans to do air extraction, air quality at power stations, that kind of thing. Remember, Howden is part of a global group that owns brands and is involved in industrial installations of that nature. This is the African business, which I think is 55% held by the global group, listed for some reason.
Market cap here of 1.9 billion rand, a PE ratio of 8.8. Currently not paying any dividends. Should that raise
that is quite contentious, actually.
Exactly.
It is a very cash-intensive business. It had a lot of cash on the balance sheet, and about 2 years ago they decided not to pay a dividend, and minority shareholders were up in arms, saying it's the majority shareholder that doesn't want to pay out the cash, wants to hoard the cash. But I've got some appreciation for their situation, because this is the most order-based business we're discussing today. It's all about Eskom and big plants with heat transfer mechanisms, environmental extractors, and the moment you have the ending of the new build phase of power generation plants, Howden's activity levels will drop quite significantly.
So they're shoring up that cash because of the project-based business.
Yes, and they need to do that. It's the right thing to do.
It's being prudent.
It is being prudent.
I mean, they don't want to run out of cash. We know that that is the first killer of a business if you can't get your cash flow.
Let's use the graph though, because in the days 4 or 5 years ago, it was really flying and everyone was super happy and it was paying great dividends and it was doing new business. The problem is now, in the downtrend, then everybody starts picking at the technical assistance agreement with the global parent and so on. So there was a lot of unhappiness, bit of investor relations, handbags being thrown, got a bit ugly. So I don't know. I mean, I don't know where it's at now. It's a combination.
But surely shareholders are going to understand that this is about the sustainability of the business, and that short-term cash return to shareholders is not in the interests of the business over the longer term.
It's difficult to understand before the fact. I think when we get to that point where you see the business is actually not generating cash but absorbing cash, then minority shareholders will understand. But until we get to that point, they'll be up in arms because they see the cash on the balance sheet. And yes, there is a technical agreement also which is not great, because they are transferring cash to the holding company for odds and ends, some kinds of service that
we're out of time.
I think not hot for now. The business outlook looking a bit tricky, as well as potentially
as well as the economic environment looking a little tricky.
And that it's order-based, very lumpy, not my favorite, so not hot.